least at this point, that's the indication. But let me switch focus to the US markets. You'll see a 1,000-point rally already on US futures. That's the indication. The S&P 500 also up around 2.25% and this is the futures market. This is not yesterday's close. And the Nasdaq is showing an uptick of 3%. Now, US markets are anything between 2.5 to 5.5% from their all-time highs. That's something you want to note, because this rally, at least in the futures, is indicating that you'll likely see US markets close in on all-time highs probably this week if this ceasefire, of course, were to sustain. Let me bring on board David Chao, global market strategist, Invesco, joining us this morning. David, great having you on a day like this, right? There's just so much activity across markets globally. Give us a sense on how you're viewing all the events that have played out over the last 2 to 3 hours.
Well, I'd say that it is another day of headlines. And while I don't want to be a negative Nancy and rain on this parade, I do have to caution that this is perhaps more of a tactical buying opportunity. I have to warn that the war is not completely over. This is not a peace forever structural development. And so while there is a cautious optimism here, I do still need to remain somewhat cautiously optimistic in this instance.
Hi, morning. Do you think the markets will sustain at these levels, and if you look at the conditions set out by Iran, these are too steep conditions for US to agree to. Means it's maybe a starting point for both the countries, but do you think you're going to see somewhat diluted conditions getting agreed by both the sides?
I think it's a welcome development that we have arrived at this ceasefire, and it suggests that both sides are maintaining cooler heads despite some of the fiery rhetoric that we've seen over the past couple of days. I think that this sitting down, if it is to happen, which we hope it is to happen, suggests that there is a pathway for a diplomatic solution. Now, what I will also say is that geopolitical outcomes are impossible to predict. And so that's why I don't think that market volatility is set to end. And in fact, I think that this is a good opportunity to remind ourselves to stay well diversified, especially during these uncertain times.
Yeah, because I was asking this because, before the entire West Asia crisis started, US and Iran were in discussions, and then US decided to go ahead and bomb key installations at US and Israel decided to bomb key installations in Iran. Do you think that this 2-week ceasefire will hold, given the fact that, there is the rhetoric that comes in from both the sides?
It's really impossible to say. And I'm no geopolitical expert here, but the daily headlines that suggest one way or the other, the topsy-turviness of this all means that we are still in for a ride. And I would not be trying to day trade the Middle East conflict.
And how do you look at indicators on the ground? What are the indicators that you're going to look at to see whether this is holding up or not?
Well, it's very difficult to have a very good pulse on what's going on in the Middle East. But instead, I look at more macro elements. I look at company fundamentals. And so when you combine both things like company earnings and then kind of the macro backdrop for places like India and Asia, then we make a forecast on what markets are likely to do. So I would say that the development for the ceasefire is certainly very welcome in places like India or North Asia, where their economies depend more so on imported Middle East oil. And that's why we're seeing the leap in risk assets there. And I still think that there's quite a ways to go. Asian assets were disproportionately sold off during this crisis due to their reliance on Middle East oil imports. And I think that they're going to have a disproportionate bounce back. And I think that this week is likely to be a very good week for Asian assets.
Interesting. David, just last piece. Is it risk on again Do you see that? Because you seem to be on the fence a little bit here. You're saying no change to be made despite everything that's playing out. Am I reading it correctly?
Well, you are reading it correctly. I would say that it's really hard to day trade the headlines here. I'm also suggesting that this is the development that we've seen. It's not a structural development. This is not a peace forever development. Instead, I think this is more of a tactical 11-day development, and we'll see if it holds. But my call still remains: stay diversified. But this war is likely to end. Not sure when, but when it does, Asian assets have been oversold, and I think that this is a buying opportunity still for Asian assets.
Okay, David, thank you so much for that perspective. And on a day like this, it's important to get that. We need to take a bit of a step back and see how markets will obviously play out.